Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day, and it is the end of November, beginning month of the year. So time has flown by. A lot of economic news releases scheduled for today, so we're going to jump right on into it, and we're going to start with the ADP employment numbers. Uh, Back in October, they reported 130,000 new jobs, and they came in at 206,000 jobs. So great numbers there, looking good. Productivity. This is for Q3. It was reported at 3.9 or 3.1 rather. We figured it dropped down to about 2.5 and actually dropped to 2.3. So a little bit lower on the productivity. Unit labor costs, there's a negative 2.4 cost, so the labor costs were low, and it's also for Q3 at 2.3 and actually dropped further, so negative 2.5. So labor costs dropped as well as productivity dropped a little bit as well. So not bad news. We're still hanging in there. Chicago PMI, this is the manufacturing in the Chicago region. We've been seeing some pretty not so good numbers in manufacturing lately, and 58.4 is what was reported before, and we figured about the same, and it jumped up a little bit. So good news there. Manufacturing picked up a little bit. Pending home sales was at negative 4.6 and jumped up to 10.4. So we got some phenomenal uh, report there at 10.4% pending home. So that's great for the housing sector as we need that. And then later today, we got the Fed Beige Book. That will be released about 11 o'clock Pacific Coast time. So that should be pretty good information as well. So that could be a market mover later today. This provides some insight what the Fed's thinking. So the investors will be looking at that. So what do we have on the headline news? Well, the stock market's way up today, and that stuff was good news. But I mean, the Dow is up over 400 so far this morning, but a lot of it has to do with this. The QE program for EU is announced, kind of headed actually by the US. Basically, what they're doing is all the global central banks are kind of doing a joint venture, and they're going to go in and make sure that there's liquidity as there's becoming a very big credit crisis going on there, where uh, to uh, to ease some of the concerns, the debt crisis over there. So now the yields that these countries were paying that were exacerbating the issue now are declining a bit, so creating a lot more liquidity for these companies because basically it was getting to the point where banks were not lending to people, weren't lending to each other, hoarding their cash. It was creating kind of issue, kind of like what we saw here in the U.S. Around 2007, 2008 when we had that big crash here. So, but this is on a global, more of a country level over there, obviously. So much greater impact. So this is what's going on, and basically what they're doing is they're exchanging euros for dollars and creating more liquidity again to those you know those institutions over there as they see fit to help create that liquidity over there. So the markets are loving it and kind of moving. So this could be very much the breakout that we've been looking for. Definitely we would trade in rates for a better economy as, people, we need jobs, we need people working, we need people spending money, get things moving. So that's obviously the most important thing here. So let's jump over see how this is affecting the interest rates in the bond market. So actually what we did was after a jump up yesterday, it actually was down about 18 basis points to start the day off, but right now it's recovered. So right now we're back where we left off yesterday. So depending on when the rate sheets came out, they could have been a little bit worse than yesterday, or they could be about the same. But given the fact it could be about the same as yesterday, at some point today, they could make a rate change if this continues at 18 basis points. So we've seen it go up and down right now. And again, this could, depending on where this follows, this could be rates. I would just say at this moment, our rates would be about this. Interest rates would be about the same as where we left off yesterday. All right, folks. You guys have a wonderful day. And again, if you guys are on my site, either whether it's YouTube or Mike's Daily Market Report.com, please subscribe and get your email posts. Have a wonderful day. See you tomorrow.